Welcome to Dave's Desk. I'm Dave, and in this video, we're going to share my 4 big predictions for 2022 in the Ottawa real estate market. Being a team lead and leading some amazing agents, we helped to place over 80 families find their dream home in 2021. And with this active view of the market, and by looking at market trends every single day, we have a pretty good feeling about the market and think we know what we're talking about. Let's dive into some of these predictions. Prediction number 1, inventory supply. All right, we are in a desperate inventory shortage with currently less than 1 month of supply on hand. What that means is if we had no new homes added to the market, we would sell out before a month's time. And as a reminder, a balanced market should have closer to about 4 months of inventory. The reality is we haven't seen that level of inventory consistently since probably March of 2019. And actually, we've been seeing a steady decline in inventory ever since, as you can see in the graph here beside me as well. So the question becomes, when will we start seeing relief from this inventory shortage? The short answer is no time soon. Basically, people can buy a home from one of two locations. They can either buy a new construction home, maybe from a builder, or they can buy a resale home from the secondary market. One of those two spots. Now, let's look at builders. The opportunity is there for builders. They would love to build up more homes and very rapidly, and they're working tirelessly to do so. In fact, we've seen a record number of new home construction starts, as shown here. And even the Ontario government is trying to back them up. And Doug Ford was recently quoted as saying, "We've got to start cutting the permit times down big time and start getting houses built as quickly as possible." So builders are scrambling, they're working tirelessly, the Ontario government is trying to back them up. But the reality is you can't just pop a house up overnight. And it's especially during the COVID-19 pandemic, they've been faced with some real issues, some labor shortages, supply chain issues, not being able to get materials in a timely way to job sites, and whole projects being slowed down. We can't look to new construction to be the answer to our inventory problems. It's going to be slow. It'll happen eventually. They will ramp up, but it's not going to be overnight. And with build construction times over 12 months often, we're probably not going to see the full result of these new home construction starts until in 2023 or later. So let's turn then to the secondary market. And for us to see that kind of dramatic increase of supply, we would need to see consistent month-over-month surplus in inventory. This means we would need to see the number of homes listed be greater than the number of homes sold each and every month. This will not happen overnight. When you break down the numbers, if we assume 10% of all new listings remain on market without being sold, then it would take approximately 36 months for us to get back to a 4 months inventory level. That's quite a long time. That's 3 years. So if we have a 10% surplus, and I remind you, we haven't been seeing surpluses, we've been seeing deficits for the last 2 years, but assume we turn that corner and we start to see a surplus of homes every month, we would need to see 36 months of that continued surplus to restore us back to a balanced market of 4 months inventory levels. So the reality is we can't really expect builders or the secondary market to turn this around all that rapidly, and we're likely to remain in a deep inventory shortage all throughout 2022. Prediction number 2, buyer demand. All right. When discussing the extraordinary demand that buyers have for Ottawa real estate, people always ask me, "Dave, where are these people coming from?" Like when you stop to think who's buying up all these houses, people are asking, where are these people coming from? There's no easy answer to that question. My short answer is Ottawa is an amazing city to live and invest. I mean, it's a beautiful city. We got lots of green space. We have lots of outdoor activities. We have amazing arts and culture. Our employment is rock solid. And comparatively speaking, our home affordability is better than the GTA and many other major cities across Eastern and Southern Ontario. And we've actually seen personally, our team, many people moving from those cities into Ottawa for this better affordability, and they can sell out their more expensive homes and trade up into a bigger, better, less expensive home here in Ottawa. So we've seen that happening. It's also interesting to know that Ottawa still does not have a non-resident speculation tax. That's like for foreign investors, as compared to many other cities throughout Ontario. I wouldn't be surprised if we saw that introduced. I'm not saying this year, but I'm saying soon in the years to come. It could happen, but I don't know when. it wouldn't shock me to see the non-resident foreign tax applied to Ottawa as well. If we look at city planners, they're obviously taking a long position on the population of Ottawa as well. There's been huge infrastructure projects, mainly the LRT. This is a huge capital investment, and in anticipation of increased population, increased demand, more people moving into the city. And when you talk to the economists about the LRT project, everyone's planning that right along the rail, everywhere there's a little station, there's going to be huge construction and infrastructure added, and more buyers are going to be flocking to these locations because it's going to provide better quality of living, less commute, lifestyle, and all of that. So we expect that buyer demand is going to remain strong, and that the LRT is adding a lot of value to buyers along that corridor. The Ontario Ministry of Finance also predicts that Ottawa will be the fastest growing city in all of Eastern Ontario, and that the population is expected to grow from 2020 to 2046 by a whopping 43.7%. That's huge. So we can definitely expect that buyer demand will only increase over the same period of time. Number 3, interest rates. All right, so the overnight lending rate, as set by the Bank of Canada, has remained unchanged for nearly 2 years, and you can see it here. One of the fundamental concepts of interest rates is that it has an inverse relationship with inflation. When interest rates are low, inflation will be high, and we've been in a low interest rate environment for a very long time, and it's put a lot of upward pressure on inflation. And this has only been exacerbated by COVID-19 and the government's response to provide emergency relief funds through quantitative easing. This is basically interjecting new money into the economy, which basically devalues the purchasing power of our Canadian dollar. It is unsurprising, therefore, to see that inflation has begun to rear its ugly head right across the economy. In fact, if we look at the latest data from Statistics Canada, it shows that the Consumer Price Index, which is one of the primary tools they use to measure inflation, has skyrocketed up to 4.7%, which is now well above the Bank of Canada's control target of 1 to 3%. So it's obviously getting a little out of control, well beyond what the Bank of Canada would like to see it controlled around. So we can therefore confidently expect they're going to step in and they're going to start increasing interest rates. They will go up. I expect there will be incremental changes to the interest rate. It's not going to be all done overnight. But as a reminder, the Bank of Canada has 8 scheduled announcements throughout the year that they may or may not change the interest rates. So I expect over the next 4 to 6, maybe like Q1, Q2, that most of those will include at least a small incremental bump in interest rates. So maybe 25 basis points per announcement, up to a maximum of maybe 100 basis points, which would result in a 1% appreciation over the year. That's my guesstimate. And that's probably going to be spread out over the first number of announcements in Q1 and Q2. What kind of impact would a 1% increase have on the real estate market? All right, let's talk about it. It's all about affordability. Taking an example here of a family who can afford a $3,000 a month mortgage payment. Right now, at the current lending rates around 2.75, that family, assuming they put 10% down, can purchase something around the $700,000 mark. Okay, and if interest rates were to bump up to 3.75, that's an increase of 1%. Then the same buyer who can afford $3,000 a month can now only afford a home around the $630,000 price range. So it reduces their affordability by about 10%. So a 1% increase in interest rates would equate to about a 10% decrease in purchasing power for most buyers in this example. Okay, now the people who suffer the most in this are those first-time home buyers who are already struggling to break into the housing market and purchase their first home. This kind of interest rate hike could be devastating for them, and it may squash any of their dreams of owning a home in 2022. However, practical speaking, then yes, this type of action would put downward pressure on buyer demand and would help direct the market back to a balanced market. Number 4, market prices. What does this all mean for prices? Well, it comes down to the simple laws of supply and demand. Inventory is now lower than ever, and demand will only get stronger. In 2022, as a reminder, when we began having these inventory shortages, residential homes went up by 20% and condos went up by 19%. In 2021, when our inventory problems got even worse, residential homes went up 24% and condos went up 16%. Now, our inventory problem is worse still. I see no reason why we couldn't expect similar appreciation in prices in both the residential and condominium markets. Yes, interest rate increases will put some downward pressure and cool the market a little bit, so maybe not as huge appreciation as we've seen in the last couple of months, but I still wouldn't be surprised to see double-digit appreciation over 2022. So maybe 10 to 15% appreciation in both the residential and condominium class homes. I know that it can be difficult to imagine that we stay in this hot sellers market for so long now, almost third year of being this ridiculous sellers market. So I get that. I'm not the only one, however, taking this view of the longer market cycle. And in fact, in their most recent report by the Canadian Real Estate Association, senior economist Sean Cathcart is quoted as saying, "Housing cycles can be very long, so market trends do not care that we've put up new 2022 calendars up on our refrigerator doors. The fact is that the supply issues we faced going into 2020, which became much worse heading into 2021, are even tighter as we move into 2022. So, supply and demand. Demand will remain super high. Yes, interest rates will lower that a little bit, but it won't be enough to calm the market entirely, in my prediction. Supply can remain unchanged in the short term, and therefore prices must go up. And I'm expecting this will be a very long time. This ship is going to take a very long time to correct its course, and I'm saying 2 to 3 years before we see a balanced market again. Thanks so much for watching and checking in with us. If you're a buyer, this market can seem challenging for you. I would encourage you to reach out. Our team can have a quick consultation with you. We want to show you the ways that you can outmaneuver the competition and the other buyers out there to ensure that we can help find the home, secure the home, and make sure that you get a fair price and deal when you make your next home purchase. If you are a seller, well, there's lots of opportunity, but the name of the game is knowing how to absolutely maximize the value of your home and get you the best price possible. Again, we invite you to call our team and we'll give you a free consultation. Thanks so much again. And as always, I'm Dave Robertson, your real estate professional for life.